Welcome to the Edge Up podcast with your hosts Reed and Glenn from Hawaii Trading Academy. Welcome to episode 51 on the Edge Up Trading podcast. I want to read a quote for you guys, right? We heard that I think beginning of this year or last year. Caroline Ellison, the former CEO of Alameda Research, has said that her firm does not tend to have things like stop losses. She also said that she believes that stop losses are not necessarily good risk management tools. Now, after reading that, or I think I saw the video, you probably saw it too, Reed. It triggers so many questions, man. Right. And this quote, it's gonna go hand in hand with what the topic we're gonna be talking about today, but it just triggers so many questions. And to hear that from the CEO of this firm who's handling hundreds of millions, if not billions, under management, it's a triggering thing coming from a trader, right? Like I just see red flags all over. No stop losses. What do you think? What comes to mind when
Yeah,
you hear?
red flags. That's the first thing I thought. I was like, that's a red flag. But to keep everyone informed, this is Sam Fried's girlfriend, right? Or former
Yes,
ex-girlfriend.
yes,
And so yeah, it was like she got a lot of flack for that when she said basically she doesn't believe in stop losses.
right, right. And it
It
just
sounds very gambler mentality. You're
it
not doing
does,
anything,
it does.
not doing anything to save it.
Like is she focused on? I mean, maybe her firm. I don't know the stats of it, but it just shows that they're focused on trying to make mo- more money. It's like, what's the next thing? Let's just get in this trade and wish for the best, wishful thinking almost, right? And that kind of goes hand in hand with like a gambler mentality that they're just placing their bet and hoping for the best. And when it comes to traders that we know that we look up to, a lot of the questions they have, or the main question they have when they enter into a trade, how much am I willing to lose in a position? They look at, say they have multiple positions, what's my total portfolio exposure? These are like just super key questions that you and I, as a retail trader, individual trader, ask ourselves almost daily, because I think we realize over the time in our trading career, these questions are so key, and that these questions are what kept us in the game for all these years, rather than, oh, yo, I can make $1,000 in the next 2 hours right here, let me just get in, no stop losses.
Yeah, that's straight up gambling mentality. That's what I think.
So let me reel it back, Reed. Like, let me ask you, when you started out trading, similar with I think I could relate. I had a little bit of that gambler mentality. How did you, like, what did it look like for you to get to that point of like, yeah, you know what, I'm gonna ditch the gambler mindset. I'm gonna become a risk manager. How did that journey unfold for you?
Yeah, for me, it wasn't. Well, yeah, when I first got into trading, 100%, it was like, how fast can I flip this $2,000? Like, let's go, risking all of it just to hopefully make something. And I think that's what got me into trouble too, because my first couple of trades were actually winners, and I was straight up gambling. I didn't have a plan or anything. But I think over time, realizing like, okay, trading or like this is not for me, I would be coming close to blowing accounts, and I'm like, okay, this isn't financially smart. So it just began like, okay, maybe I should put a stop loss. Okay, this stop loss is way too much. You're risking like 5% on one trade. So it's a gradient process. Like it slow. Okay, maybe 4% risk. Okay, 2% risk. Okay, I'm sticking to 1% risk. And now, like, with these funding firms, even less, like 0.7, 0.25. That's what we're risking when we're handling, large funds. So I think that's my focus just began to shift over the years. I identify risk first. Where's my stop loss going to go first? And then if the trade pulls against me, what's the worst that can happen, right? What's the worst that I can lose? And those are like the things that I check off now before, like, I'm like, okay, oh man, this trade could hit 10R right here. Like, of course, every trade could theoretically hit 10R, right? The market's unpredictable, but I think you have more control of what you could lose than what you can make, right? So that's something to keep in mind. How about you, man? Did you have a gradual? Was it a gradual, or were you like, after one single trade, you're like, you know what? I'm a changed man.
For me, it was the first year of trading. I had zero knowledge, or I didn't know what risk management was. It was like I was just told, risk this amount of ticks in your trade, and just, you should make money in the end. And that was a big gap or piece that I was missing in my trading. And of course, I think what shifted for me was feeling the losses, feeling the loot, like just experiencing losing and the market teaching you, just humbling you. You think you got it, but you don't, right? A lot of that veteran traders, they say that in the books. When you think you got it all figured out, the market just changes it up and serves you humble pie. So over the time, taking those losses on the chin, acknowledging it, I don't think I got to a point where I wanted to throw in the towel, but I knew there's probably some points where I had to just take a break. I think overall, like there's people who already done it, right? And so as you go and learn from the greats or read their books, watch your videos, you get to understand that you'll start picking out. It's like you got to read between the lines, you know? When they speak, they're always relating to risk management in some way, shape, or form. And to me, then like well, I don't know if it was a light bulb moment, but it was like something, it gave me a goal, I guess, a target to reach for and understand this risk management game. And so once I started implementing that, once I started getting more guidance on it, of course it led to better trading because I didn't blow accounts every month.
Yeah, you mentioned something that's very key, man, that I've also read, I think, from, Brett Steenbarger, trading psychologist of SMB Capital. He mentions the pain threshold. It's like how much pain, how much losses are you willing to take before you start taking action? And like I think that's a lot of rehab centers too. They find like the people who've hit the lowest of their low in their life, and then that's when the rebuilding happens. And I think that's the same thing when the transition from gambling to trading, actual risk management, it takes that many losses. What is your loss threshold, right? Some it's, a few thousand, some it has to be, hundreds of thousands of dollars before they actually make a change, right? Just depends on who you are.
Yeah.
But I got a side thought, bro. What about like the whole saying, without risk, there's no reward. So like YOLO and like, like
What comes to mind too, like without risk, there's no reward. They say scared money don't make money, right?
yeah, that's a quote, bro.
Like
Yeah,
that
that's
that
right.
right there, you'll see that lingering in the mainstream and in songs and news
A lot
or
of in the crypto market.
crypto market, right? They're pushing that. And of course, like you look at the demographic of that, this new wave of traders or crypto people, they're of course they're younger and they're eager, they have a drive, right, to make money. And they're all saying, they're looking at that big what if, like they see these people on social media posting, yeah, I threw in $1,000 in his Dogecoin, blah blah blah, I made this much. It's they're holding on to that hope. It almost reminds me of like lottery winners, they just go buy lottery tickets every day and just pray and hope. I mean, you do that consecutively. I don't know how much a lottery ticket is, but like they done the statistics. I think you have a better chance of getting struck by lightning according to probabilities. Sorry, and trading is about probabilities. So when it comes to that whole mind frame of thinking the what if without risk there's no reward, you're totally approaching the market in just not a good way.
Yeah, I think when you're approaching the market with a certain mindset, that's what they talk about, like in trading mindsets, everything. This falls in the mindset. It's like, hey, are you looking at the process or the result? Like, what are you trying to look for in the end? Are you trying to see how much money you can make or see how much money you can keep? And I think going, using those excuses like, oh, don't worry about my risk because I know it's gonna be worth it. But it's I think a
Mhm.
smart investor, a smart trader, a smart decision maker in general and in life, they observe all the risks involved, and no matter what decision it is, and expect no greater results than in the market of how to approach risk. You're supposed to be coming from like a neutral and accepting standpoint. What are your thoughts on like what a risk manager does?
Yeah, like switching gears from the gambler, the YOLO guy, or gal, the risk manager, what I've learned or observed over time was that these risk managers know themselves. They can control their emotions, right? To be able to make financial decisions. They're making financial decisions based on stats or based on their system, based on their strategy, rather than, oh, I feel it. Woke up great this morning. The stars are aligned. My coffee was solid today. I'm going for it, you know? Like there's a fine line of that, right? Like, I think athletes, right? They know how to activate that, getting in that zone, right? It is a bit emotional, but I think it's more so focus rather than feeling lucky. And so risk managers, like I said, they were able to just control their state and they know themselves well. They know when they start trading on tilt. We mentioned that in one of our older episodes. But they are able to also document their actions, like their decision making, and being able to review it in a great state of mind and be what do you call open minded to, yeah, you know what, I accept that I made a mistake there. I fat fingered the keyboard and I went 10 lot instead of one. That they are able to just look at themselves in the mirror, and I feel like a lot of people have that. I think that's the biggest obstacle for them. Yeah, wouldn't you agree?
Yeah, I got a question for you, Glenn. What do you do when you do fat finger? You add extra zero, and but somehow the market is in your favor today, and you had that cup of coffee, you did some yoga in the morning, life is good. You fat finger your entry order, and it's big, like you're running a big position. Do you immediately close it down? You're like, hey, you know what? It's going green. I fat fingered it. I messed up, but I'm in the green. I'm just gonna keep holding it. What are your thoughts on a situation like that, man? What do you do?
Yeah, my old self would be like super excited, super pumped, and of course I'll probably try to maybe take profit too early, be on a high. I'll be on cloud nine, right? If I was to do that now, right away, I think I would be able to tell myself, okay, this was a total accident. Let me let it run. Let me cover my exposure. Let me take care of that. And I'll just take what the market gives me. And then in my journal, I'm going to call this a total, it's going to be a mistake and luck. 99% luck.
I kind of
So,
disagree.
yeah, would you?
Yeah. Okay. So
I
I
want to hear your
disagree because
thoughts.
so let's like flip the script here. What if it's running red and it's fat red? You're like, yo, this is way more than I thought. You doing the same? You're like, all right, let's see how much more I could lose. Like
I mean,
maybe it could pull
obviously,
back.
you cut your losses quick. Once it
Right.
to me when I have, because I know the dollar amount of the risk I'm usually willing to take. So mindfully, I will have that figure in mind, and then I'll cut it. I'll cut my losses quick, because it's dangerous, man. You let that, to me, like when you let that big position ride out, and it's gonna be emotional roller coaster,
I would say that like your answer in the beginning, it's very I would say that's veterancy because if it's a new trader, I definitely recommend if you fat finger anything, close the position right away. Like because that's you can't say it's okay this time, you can't say it's okay for one and the other. As a veteran, I think you can. You're allowed to say this, Glenn. I'll give you this one, but like I disagree. I think if you mess up, um, you need it because it shows accountability to yourself. Shows that I can be disciplined. Oh, I didn't follow a plan this time, but it's working out. That's okay. I'll let it run. Whereas, like, oh shoot, I even if you make that no, it leads to me. It leaves the door open. It leaves the door cracked where you could continue to make mistakes. You could continue to bend the rules a little bit. Like going back into like gamblers are willing to bend the rules and bend the plan. There's a lots of discretionary decisions,
Mm.
or like using excuses, using emotions as excuses to break your plan, like it doesn't lead to a long survivability. But obviously, like you've done, what you're doing, and like I'm sure you've made mistakes in the past. Has that happened where you have made mistakes? You're like, oh shoot, close it right away even though it's green, or you're just like anytime it goes green, just let this guy run.
Yeah, I think it's a cross of the experience, and it's a cross of learning and discipline. Because I would make orders and I would fat finger them or make a mistake. I would close it right away immediately and just take that small hit. Um, and that way, like that's a sign of discipline, and you just move on to the next. Like, damn it, Glenn, did it again. What was I doing? Then you got to pick apart. Okay, was I distracted? Was I in the middle of something else? Blah blah blah. That was kind of the way I've gotten through that. I would love to hear how you, like, if you fat fingered it, you're saying you would close it right away?
Close it right away. Yeah,
Yeah. And then
absolutely.
would you continue training or would you
Yeah,
want to
yeah, I would still
kind of
trade.
reset?
I would just be like, oh, I fat figured this one doesn't count,
Okay.
something like that. No matter
Right.
what the result, I would still just put like negligible result so it doesn't encourage me. Even though it's like the best trade of the year and it was a fluke, I gotta disregard that. I don't incorporate that in my statistics. If it's truly an accident,
It's a one-off.
um,
Yeah.
yeah, it's a one off. I
Uh,
don't have many of those anymore. Maybe once or twice, maybe three times, but this year I've been pretty disciplined. I don't have that this year.
oh
But
yeah.
I kind of wanted to shift our focus here a little bit, Glenn. Like a couple of like questions for you. So one thing also, like, we discussed no risk or no reward type of fallacy. The next one I want to kind of discuss with you here is like intuition. When does intuition come into play? I feel like I've heard this on both professionals use intuition. I've also heard this on lucky survivors of the great 2020-2021 bull run, who were able to success and profit off of that. They're like, I just use intuition, man. Like that's how I'm making it. I know this one's gonna be good.
Yeah.
So when you're looking in the market, it's hard not to say like you used intuition or like my experience. Like I think that like let's talk about that. Like what is intuition in your mind? Or how do you use intuition?
Yeah, intuition, it's a I think it's a mix of things, you know, you use your experience, you use your I like kind of listen to your gut in a way, but you're just really observing, being present, you're observing, you're taking in the current information and you're giving it an assessment, right? You're coming up with a conclusion on what's happening. There's times where like you have your trading plan. It's laid out before you even open up the charts. Hopefully, that's ideally, right? But then the trading market is happening and you're seeing the action unfold and there's times where like the market isn't giving you a clear cut signal to get in. But at the same time, over the years, since you've been putting in the thousands of hours of screen time, you recognize what the market's doing and you go ahead and, you know, like you make the decision, okay, I'm going to get in. I saw this before, you know, I saw it in my back testing, or you might have data, or like you just know, you know, there's times where you just know, and the trade ends up, you know, working out. And I think that's where, like, over time, you just gotta you try things, you lose, you try it again, you lose, you try it again, it works out, and you just develop that, I think, what do you call it, memory muscle, right? Yeah, you just repeating that action and you're getting better at it, you know. And I feel like everyone has their own intuition when it comes to the market. I'm sure you do too. But I want to ask, like, when do you make intuition decisions on your trading? You know, are you 100% just sticking by to your system, or do you just like open up, like, you know what? Yeah, I'm comfortable with taking this. It's not on my
90
plan.
90% of the time, man, it's the plan. Like 99 really. Like I'm very strict and adherence to my plan because that's what got me here. That's what got me to be a profitable trader, and I want to keep it that way. So I'm going to continue to follow the plan. The times where I'll actually use my quote unquote intuition, or what I think a lot of psychologists say intuition really is just experience of doing the same thing over and over and over again, right? And I think that's because it happens in sports too. Like, oh, I just had this intuition to jump before or like do something before, and it happens, right? So I think it applies both ways though. It applies for like, oh, this is a move that's going to happen, and you enter it and you win. But there's, for me, the way intuition works a lot with me when I'm adhering to my plan is I'll be like, there's something about this trade that I don't like. I'm just going to stay out, right? Like, news is not there. Everything just looks really good, but for some reason there's something about it that's off, right? And a lot of times you don't realize what's off until, a couple years down the line, and it's like what is it called? What a force, not foresight, but like you look back, right? In
Hindsight,
hindsight,
hindsight. Yeah.
everything is like it's different in hindsight. Easy to say, oh yeah, like this. The reason why I felt different on this trade was because look, this was different, or maybe it was different on a higher time frame or something. There's something that maybe intuition now becomes part of the plan later. And that's just through a lot of it's through experience. So like we're talking about like following the plan. We're talking intuition. A third question or third topic I want to bring up, man, is like, okay, so I'm not a gambler anymore. I have a risk management trade. I'm doing well. You know, I keep my intuition in check. I have that part of my plan. Third one here is like, when can you size up though? Like, when is it okay to size up? Like, as far as like trading versus gambling, when I size up, I know gamblers like they double down, double or nothing, right? So like, what are your thoughts on like sizing up in the future?
Yeah, it reminded me of one of the books I was reading. They're talking about when George Soros was in this yen trade. I think he was going long, and he knew some other traders who were on the same trade, and they were hitting new equity highs. Like this trade was making great profit for them, and so they exit out of positions. And George Soros, he told them, you sell me your positions, I'm gonna ride this train even longer, you know. And like right there I was like, whoa, okay, what did he know that these guys didn't know, right? That gave him so much confidence to go take over their trades and continue to ride it out. Of course it worked out for him. He said, it doesn't matter how many times you lose, it matters how much money you make when you win, or something like that. Don't quote me, but I mean, it might be a little off. But yeah, I was just listening to that quote, and then it kind of sat with me. Well, at first I didn't understand it, but like he was right. Like when you have a great trade going on, you have to figure out how you can systematically, or make a process out of it, how to size up so you can get the most out of it, because the market doesn't always deliver that kind of result all the time. And so you try to maximize the gain on these better trades. For me, like of course it was a learning curve on learning how to size up. I'm still in it too, but what worked out for me was doing the back testing and seeing how the model plays out. But also, the other biggest thing is to see how much exposure you're willing to take. What's the heat on your portfolio when you have a few trades going on at the same time. Say you're risking 1% in 5 trades, then your total exposure is 5% plus or minus commissions or fees. You got to figure out, like, what comes to mind. I think I learned this from Tom Bossel, was that like you have to keep your total exposure, according to your total equity. There's a ratio, or there's a way to figure that out. And that's what keeps your emotions in check. If you have the stomach to do 10% or higher full exposure on your portfolio, then go for it. And so it takes practice, it takes a lot of homework, and it takes a lot of research to go ahead and figure out what that sweet spot is for you when it comes to sizing up. It's going to be a gradual thing. You don't just like go YOLO all in, like freaking you're one lot trader and then you go to like 20 one day. You don't do that, right? So you just got to build it up. You got to gain the confidence. You got to gain be systematic about it, be logical, right? And always make sure you're going to be staying in the game the next day, man. How about you? Like, how did you start figuring out how to size up your positions?
Yeah, so I mean, it's for anyone, every individual is different. It's based on risk tolerance, right? Like how much you're willing to lose per position. I stuck with 1% of my entire capital for a long, long time. But thanks to like prop firm industries and just learning a lot about risk more, I'll risk like 0.25% until I get a nice buffer with prop firms, like yeah, for losses, account for losses or anything, and then size up to 0.5% and then just go from there. Like that's how eventually get up to 1% when it's like a nice buffer. But yeah, I'm thinking that so slow, very slow process is how I would approach sizing up.
Adding to that, right? Like, was there any particular tools or things that you use on your end when it comes to helping you manage risk better or faster or easier?
Last thing I do want to say about like risk management and tools, one idea that really changed my whole perception of risk management versus gambling, man, is shifting that dollar% or dollar into a percentage and like going off of like, okay, what's 1% of this entire account, rather than, oh, I need to make $1,000 for rent or something, for groceries, whatever it is, right? You set a dollar figure amount, that could lead into psychological troubles, and where you can't maintain an account, and stresses and fear and even greed steps in. You're trying to
Yeah.
get a dollar amount. But I think percentage really is something like most all mature. That's when you matured. I think in your trading is that's when the first step to becoming a risk manager is like only risking percentage, like thinking in terms of percentage. But other than that, like actual software tools, man, I use a risk calculator app. Like literally, it's called risk calculator app. Put it on MT4 or MetaTrader 4, MetaTrader 5. I use that on TradingView. TradingView is the software online software that I use to manage or look at my positions, analyze the market, and I use what's called like phantom positions or ghost positions. My biggest like tool that I have there is like putting on and sizing my positions as if I actually traded them. That helps with just overall data gathering and then seeing how things work out. A couple others that I would mention is my Forex or my FX book. They pull your data from like Owanda or Meta, whatever broker you have, and they put it into like an online portal so you could actually see your results amongst others. So that's really cool. And then finally, Forex Factory. That's where I get all our news from. Like that's how we're not fundamentally based, but we do know that fundamentals do drive certain moves. So it's good to be aware of the heavy volatile movements, and that's usually fundamentally driven. And then yeah, that's through Forex Factory. But
Sweet.
how about you, bro? You got
Yeah.
any more to add to that one?
Yeah, I would add a few more. So the good old spreadsheet, Excel or Google Sheets, especially for when it comes down to like sizing, you're doing your equity, checking, just going over all your trades in your portfolio. Um, like knowing the current position, the exposure in your current positions, like it's simple as a spreadsheet. You just jot your positions down, you jot your stop losses. You can calculate it easily based on the amount of contracts or lots you're using. Having a simple trading checklist, right? Whatever, like use a doc, use a notebook, just like your pre trading routine, even your post trading routine, right? When you take the trade, you close out the trade. Are you entering it into your journal? What are the steps in your process? I used to have sticky notes all over my monitor, because when I'm staring at the charts, I'll get like a little tunnel vision and just totally forget my trading rules. But when I look at the bottom right, it says, I'll keep myself in check, like don't YOLO, keep risk and all this. So the sticky note, keep it simple, guys. There's also like if you're in a prop firm or the dashboard, lots of the technology is great out there. They do good dashboard data. They just look at your current stats right there. Also, don't forget like airplane mode, you want to keep the distractions minimum. You can't be tweeting, you can't be watching YouTube while attempting to put on a trade on the charts, especially if it's a big size and whatnot. So keep the distractions to a minimum. You see guys, opposite, right? They'll have like 20 screens in front of them. TV, the news is blurring out. And it's fine. Like there are traders, successful traders to do that. All power to them, but if you just want to keep your mind clear, minimize the distractions. And I want to end with this last quote by the awesome, great Paul Tudor Jones. Risk control is the most important thing in trading. If you have a losing position that is making you uncomfortable, the solution is very simple. Get out, because you can always get back in. And those are one of those sound, timeless quotes that will ever forever be applied to trading and allow you to stay in the game.
Oh man, think as a risk manager, not as a trader or gambler. Think how much money you could lose before you think about how much money you could gain. Because the profits will come, man, but you got to grow those accounts.
And you got to stay in the game.
Gotta
Stay in
stay
the
in the
game.
game.
Thank you guys for listening.